A signal is not a trade. That sounds obvious, but it is where a lot of algorithmic trading systems start to break. A chart can flash green, a model can produce a score, an indicator can cross a line, but none of that answers the harder question: should this idea become an order in the real market? FerroQuant is built around that gap. The signal is only the first question. After that comes the order path, the spread, the available liquidity, expected fill quality, fees, slippage, regime, and the risk gate. If those checks fail, the most useful output is not a trade, it is a rejection. That is not a conservative slogan, it is a practical difference between a research workflow and a notification feed. A notification feed tries to make you do something. A research workflow tries to show why the system is allowed to do anything at all. Most people meet algorithmic trading through alerts. Long here, short there, buy when the blue line crosses the orange line, sell when momentum fades. The problem is not that alerts are useless. The problem is that alerts are incomplete. Direction is only one variable. A direction call does not tell you whether the entry is still available. It does not tell you whether size can be filled without moving the market. It does not tell you whether the spread just widened. It does not tell you whether the strategy only worked because a backtest assumed perfect execution. Imagine the model finds a clean long idea. The chart looks strong. Momentum is rising. The pattern has appeared before. In a simple backtest, the next candle closes higher, so the setup looks profitable. Now the execution layer gets involved, the bid and ask are further apart than usual. The order book is thinner than the last replay window. The setup needs a precise entry, but the expected fill is poor. Fees and slippage take away most of the expected edge. The broader regime is choppy, so the hold time becomes unstable. The signal did not disappear, but the trade idea became weaker. This is where a lot of public trading content quietly cheats. It shows the clean part of the decision and hides the messy part. It shows the candle pattern, not the fill. It shows the entry arrow, not the spread. It shows the final chart, not what the model knew before the move happened. That is why FerroQuant has to care about replay. Replay asks a more honest question. At the moment, the system would have acted what information was actually available. If the answer depends on future candles, the idea is contaminated. If the fill assumes a price that could not realistically be hit, the idea is inflated. If the backtest ignores costs, the idea is unfinished. If the risk gate lets everything through, the system is not making decisions. It is just decorating a chart. The better question is not, did the signal call the direction? The better question is, did the whole chain survive? Signal, order path, spread, liquidity, expected fill, fees, slippage, regime, risk, replay. Each stage can weaken the idea. Each stage can also protect the account from a bad trade. That means no trade is a valid system output. No trade can mean the signal existed, but the fill quality was not good enough. No trade can mean the market was too thin for the size. No trade can mean the setup was technically clean, but the strategy was in the wrong regime. No trade can mean the idea looked good after the fact, but not before the fact. That is not failure. That is the system refusing to pretend. This matters because many traders try to solve bad decisions by asking for more signals, more alerts, more pairs, more markets, more time frames, more screenshots. But if the workflow cannot judge execution quality, more signals usually just create more noise. The issue is not the number of alerts. The issue is whether the alert becomes a decision path that can be reviewed. A usable research dashboard should leave evidence behind. It should show the market context. It should show the cost assumptions. It should show how the order would have been routed. It should show whether liquidity was strong enough. It should show the risk decision. It should make rejection visible instead of hiding them. That is the difference between a platform that looks exciting and a platform that can actually be improved. If every rejected idea disappears, you cannot learn from it. If every winning chart is promoted and every rejected setup is hidden, you get a distorted picture of the strategy. FerroQuant is designed to keep the decision path visible, not because every model output is right, because every model output needs to be audited. The useful work is not pretending a signal is magic. The useful work is finding out where the chain breaks. Sometimes the model is wrong, sometimes the model is early, sometimes the entry is correct but the fill assumption is false, sometimes the setup works on one cost model and fails on another. Sometimes the backtest was acceptable, but live conditions are not. Those failures are not embarrassing if the system can show them clearly. They are the raw material for better research. This is also why a paid algorithmic trading platform should be careful with its claims. It should not promise guaranteed results. It should not imply that an alert removes risk. It should not sell the idea that automation means you stop reviewing the work. The real value is structure, a repeatable way to inspect ideas, reject weak setups, compare assumptions, and understand what changed between research and live conditions. This is also the standard a user should apply before trusting any automated system. Do not ask only whether the dashboard has signals. Ask what happens after the signal. Ask whether the platform can show rejected ideas. Ask whether the assumptions are visible. Ask whether fees and spread are treated as part of the trade, not as an afterthought. Ask whether replay is checking the information that existed at the time or quietly using the benefit of hindsight. Ask whether risk limits can block a trade even when the model still likes the direction. Those questions are not academic. They are the difference between a tool that creates confidence and a tool that creates evidence. Confidence is easy to manufacture on a chart. Evidence is harder. Evidence has timestamps. Evidence has costs. Evidence has rejected entries. Evidence shows when the model was early, late, or simply wrong. Evidence lets you compare the research version of an idea with the live version of the same idea. That is why a serious algorithmic workflow should feel less like a slot machine and more like an audit trail. The dashboard should make you slower in the right places, slower before you trust a setup, slower before you scale size, slower before you assume a backtest survived contact with the market. Automation is useful when it removes repetitive work. It is dangerous when it removes review. FerroQuant is not trying to make trading feel effortless. It is trying to make the decision path easier to inspect. That is the point of building around signal, order path, fill quality, cost, regime, risk, and replay. Each layer gives the system another chance to say, this is not good enough yet. That answer may be boring. It may not look exciting in the short clip. But in trading research, boring rejection is often more valuable than a loud alert. For a user, the question becomes simple. Do I just have a signal? Or do I have a decision record? Can I see why the system acted? Can I see why it did not act? Can I compare the setup against cost, spread, liquidity, and regime? Can I review the chain before I trust it with money? That is the standard FerroQuant is moving toward. Signal first, execution second, risk always visible. The market does not reward a nice notification. It rewards decisions that survive costs, liquidity, timing, and risk. And when a decision does not survive, the rejection should be as visible as the entry. That is the point. The goal is not more alerts. The goal is fewer bad decisions before money is on the line. Try the FerroQuant research dashboard at FerroQuant.com. Use it to inspect signals, study replay, and understand the path between an idea and a possible trade. Educational research only, not financial advice. Trading involves risk. Model outputs require independent review.